Now for our ETF Spotlight, taking a look today at transports. The iShares Transportation ETF, that's ticker IYT, is down more than 10% in the last month alone, under pressure today with its biggest holding, Fedex, weighing down the group. Shares of Fedex sinking on pace for its worst day in 10 years now, down almost 10%. Morgan Brennan joins us here on set with some details. Hey, Morgan.
Yeah, this is a big move in shares of FedEx today, leading the transports lower. Got the transports underperforming everything else right now. Actually, looking at a one-month chart, FedEx is the worst performer for that time period as well, down more than 25%. Investors have been concerned about slowing economic growth globally, and FedEx last night basically confirmed those fears when CEO and Chairman Fred Smith cited an international slowdown, slowing demand internationally, largely the result of politics.
Most of the issues that we're dealing with today are induced by bad political choices. I mean, making a bad decision about a new tax, creating a tremendously difficult situation with Brexit, the immigration crisis in Germany, the mercantilism and state-owned enterprise initiatives in China, the tariffs that the United States put in unilaterally.
Now, he said the list goes on, but that the good news here is that some reversals in some of those policies could actually mean growth reignites internationally more quickly. Also said that fundamentally, companies still thinks trade will continue to grow overall. The economic outlook, according to FedEx, which is seen as a bellwether, continued solid growth in the U.S., but saying internationally, quote, the peak for global economic growth now appears to be behind us. So, FedEx announcing accelerated cost cuts, including voluntary buyouts for what's expected to be thousands of employees. Also capacity reductions after troubles in the Express unit, and with the TNT acquisition in Europe, pressured profits. In terms of Express specifically, FedEx's biggest segment, getting a new CEO after an abrupt announcement earlier this month, and the company pulling longer-term profit targets for that segment as well. In terms of the cost cuts, getting a lot of attention right now because a year ago, you'll recall, that tax reform was passed and FedEx was really one of the first companies to commit to higher wages and spending, but it was quite the, I would say, straightforward conference call in terms of how the company is thinking about not only its own business, but about the macro picture globally. The thing that is actually being overshadowed in all of this is that so far their peak season, which is a key time of year for them, seems to be going very well.
Yeah, I think they mentioned that, the Cyber Monday. Fred Smith, never shy, always says what's on his mind. I guess the question that investors are trying to figure out, Morgan, is how much, with the Express decline, is it a FedEx issue, and how much are we going to just see this from company after company because of the global economic issues that this company cited?
Yeah, it's a really good question. I think that's sort of what's being kind of debated right now. When you look at shares of FedEx, they were down something like 17% on the month before the big move lower we saw today. A lot of that was around the changes in Express and the fact that there was an expectation that business segment was not performing as well as had originally been anticipated. And the other thing to keep in mind here is that their ground shipments and their freight business also did better than expected, and you're still seeing strength there. So I do think there's a lot of company-specific weakness around Express taking place here. But they, over and over again on the call, said that there has been a change in the macro landscape. They have seen global growth slow, especially in places like Europe, and that has happened faster than they expected.